For years, we just scared you guys and told you, you can't do rollovers, you can't do rollovers, you're going to have to get like 100 licenses, and like DOL is going to end the world. And then there was an election that sort of changed everything, which we all know about. And there is a little unexpected things, and DOL is dead, and some version of it will come back at some point, and you will need a security license. But the good news is, rollovers are here right now. And what's great about rollovers is there's no underwriting. Now, the home office makes it feel like there's underwriting if you don't do the proper work in the beginning, right? There's a lot of legwork and some new procedures which we're going to highlight. So rollovers aren't done the way we used to do them. There's a new procedure. Some of you have heard of it, but I think we need to be reacquainted with it. But as we're being reacquainted with it, what I think is so critical is identifying in our minds who are people that could benefit from doing a rollover? Who are people that have qualified assets? What are qualified assets? What does it mean, qualified assets? Somebody help me? What?
Tax-deferred accounts.
Tax-deferred accounts. It's in a retirement plan, right? You get some tax benefits. It's qualified, tax qualified. Right? Sorry? Can we, let's fill in these chairs, ladies, before, let's get just two, because I want to get them all filled in, and then we'll, there's two right there. You guys are great. Birthday girl. Right. Happy birthday. It was yesterday, right?
Yeah.
See, I know everything now because I'm a social media person now.
Social media, yeah.
Hey, but you know what? Did you see her smile?
Yeah.
Hey, did it feel pretty good that I sent you happy birthday, or anyone that
Yes,
sent you happy
yes.
birthday?
Yeah,
It's not that me doesn't matter, but I'll tell you what. How long would it take you every day to just say happy birthday? I only say it to people I like, or anyone I may be prospecting. So if I like her, and I'm not prospecting her, if I don't like her, I'm not going to say happy birthday. But the point is that people pay attention, just like you pay attention to who likes your stuff. So if you like people's stuff, they might like your stuff, and they might be open to talking to you when you have something to talk to them about. Now, don't spend 8 hours a day. I see some people, they comment on everything. They spend 8 hours a day on Facebook, and their numbers show it too. Okay? Don't do that. But be conscious of connecting with people. So anyways, I don't want to take too much of his time, but it's important to put the right frame on this. And that's just that we're leaving a lot of money on the table when we're not talking to people about their rollovers. And whenever there's a new process that comes in, we tend to say, I'd rather hang on to like what I know than try something new. And we just go, well, I know how an IUL works, I know how to send the link, and I said this is a different process, and they hassle us. You know, I see like right now Frank's been getting acquainted with TFA recently, Frank Nunez. Let him tell you about how fun TFA is to deal with, but in the beginning, he's new to the world of TFA. And every time he sends something in, he finds out all the things that he didn't do exactly perfect. Well, that's kind of how this works. There's a process, there's a procedure, but guess what? You find somebody that needs what we have, when this bubble bursts, and it's going to burst at some point, people are going to want to be protected. And the stock market by itself isn't going to do it. So there's just a lot of tools, and you don't want to be seen as a one-focused life insurance type of a person. So when I got into this business, we didn't do a lot of it, but over the last several years until DOL came, I mean, there was a point where rollovers was 40% of my business 4 years ago. 4 years ago it was 40% of my business. And it's shrunk. But I think right now we have a tremendous opportunity to really go out there and help people with great products, but also to help our families as well. So I really want you to hear, I asked them tonight to really talk about how to like get through the process, and how, you know, what to look for, and how to like get a proper identification and getting a rollover in, all right? So I want to thank him. The more I talk, the later he's going to get home tonight because he's driving back. But thank you for coming down. Eric Mueller from Crump.
All right, so I just want to give a roll call. If you guys would just sign in, let me know you're here, pass it down. So nice and easy. Electronics, I tell you, the technology gets better and better and better every day, right? Except when you're talking about Facebook and all the stuff that's going on with all of that. So I just want to really focus tonight on how to use Crump, and really where we are, what we do, and how to really prospect in that annuity market space. If that was a part of your world and it became a much smaller part of your world because of DOL, totally understand. So does everybody else. 90% of WFG have the exact same opinion. So business is back and it's booming. And I will tell you that the numbers that they anticipate this year are going to be record numbers because of what we did last
Are you
year.
allowed to share like what those numbers are? You know, the kind of some of the goals are,
Yeah,
so
well,
people could get the gravity. It could be more generic. It doesn't have to be anything private, but
So
just
2017 numbers
There we go.
were down, as you would guess.
Yeah.
Industry was down, WFG was down, Crump was actually up, but the industry was down. You guys, WFG did about $600 million in annuity premium in 2017. Okay, that was down from the previous year, again due to DOL. The numbers this year, they're thinking you guys could do almost $1 billion. Because the market is, you got a perfect conditions for the market. So when you think about it. So we've had 9 years of a bull market. You've got interest rates remaining relatively low. We're starting to creep up a little bit. But with a little bit of creep, we're offering better opportunities in the index annuity market space.
Yep.
And you've got volatility. What does that do? It causes people to panic.
That's right.
People start to panic. You know, I always, is everybody a gambler? Nobody's offended by gambling, right? So if you're sitting down at the table and you're winning, and you keep winning, do you leave your money on the table or do you pull your winnings off and just keep smaller bets? I mean, do you double down and double down again and double down again and double down? I mean, at some point you know what's going to happen. At some point the house is going to win. Like you said, the bubble's going to burst. At some point the bubble's going to burst. What do the markets always do? Markets always go up and they always go down. Right. And then they always go up and then they always go down. You can guarantee it. The key is finding the 2 points. Nobody has that crystal ball, at least I don't. If you had a crystal ball, you wouldn't be here either, right? But we have to be able to protect our clients because likelihood of going down when you had 9 years of up is pretty good. So the opportunity this year is amazing. I'm going to talk about some numbers here, but I want to just talk through and really so you understand why we're in partner with WFG, how you can use us. I will tell you the offices that have embraced us, who use us on a regular basis and use us the way that we're supposed to be used, their business is just taken off. It's insane. We have a couple of offices down in Texas that say, yep, we're just going to do whatever Crump, you know, you guys do it, boom. Their business has grown by 70% last year. So from 2016 to 2017 during a crazy year. We said just do it this way and their business continues to grow. So we're very ecstatic about that. But understand that we're here as your support. We're here to help you grow your business on the life insurance side as well as the annuities, the long-term care, and the DI. Use us as a resource. That's truly what we are. Yeah, we're salespeople. But really understand that our goal is to take the onus of all of the work off of you. You still have work to do. We're not doing it all for you. But you don't have to follow up on stuff. You don't have to process stuff. All you have to do is get the client in front of you, submit a clean application, and we can take care of the rest of it for you. And that includes not only the pre-sale, but also the post-sale. That involves getting meds ordered, whatever it happens to be, getting policies issued, and getting commissions paid. We take care of all of that for you. Is there extra steps sometimes? Sure. You know, we miss things sometimes. You miss things sometimes. We're all human. There's nothing that's perfect. But what it does for you is it really gives you that comfort of knowing that somebody's behind the scenes working for you, and you can contact us through that single point of contact. I passed out a contact sheet. We'll talk about that later, but that contact sheet gets you in touch with everybody. So if you haven't used us yet, I would encourage you just to check us out. You access us through your website. We're integrated as a part of WFG. You access us through your website. You go up to menu, recruiting, selling products and providers, click on Crump, or right on your site, it takes you right to our website. Assuming you're licensed, I'm assuming everybody here is life insurance licensed at least, right? If you're life licensed and you have your E&O current, you got access to everything that we do. You're set. You don't need to do anything extra today. You are good to go. So you don't get appointed with Crump. That's the first question I always get. Well, I want to get appointed with Crump, or I need to get appointed with Crump. I'm already appointed with Crump. Nope, you're not. You never get appointed with Crump. You're in Crump's system, and we get you appointed with the individual carriers at that time. So just don't be concerned about it. I know that's different than what you're used to. But just understand, you're set, you're ready to go. You can submit business tomorrow, assuming you've done any requirements that would be, whether it be state training or whatever. But you can submit business tomorrow. So I want to just point out a couple of real quick tools for you. Up here at the top, you'll see this underwriting tab. This underwriting tab will help you be very successful in underwriting. Underwriting is a part of life insurance. Not everybody's preferred. If you're not preferred, there's issues. I mean, really, truly, how many people are preferred? It's a really, really small percentage of the population. And it's not just physical fitness. It's family history, your history. You can have all sorts of things that will impact your underwriting. These questionnaires will help you. And if you got diabetes and it's in control, great. Does that mean you're going to get preferred? No. What are the questions I need to ask? I have no idea. I don't have diabetes. How would I know? These questionnaires will help you. And there's about 55 questionnaires out there. Just use them. They'll help you be more successful, which means you get policies delivered faster, which means you get paid faster. There's all the wins, right? Everybody wins in this deal. The more information you get. So please use it. It's a powerful tool for you.
How do we know when to use them?
If your customer says they got.
Okay. So if they have something.
Their preferreds,
yeah.
Easy, right?
Yeah.
But if they say, you know what, I do have diverticulitis, and you go, oh, I've heard of that. I don't know what it is, but I've heard of it. Get the questionnaire. If they say they have abdominal aortic aneurysm, you're going to scratch your head and go, I don't even know what that is. AAA, isn't that an auto insurance company? I have no idea. Hemochromatosis, and it's just alphabetical. It goes all the way down. But you've got some pretty easy ones. You know, you've got aviation. If you're a pilot, if you're a private pilot, you're not getting normal rates. It's a risky, fun thing, but it's risky. You know, foreign nationals, whatever it happens to be, tobacco use. Tons and tons of questionnaires. And most likely, your clients are not going to be boring preferreds. They all have history of something. Oh, I used to smoke. I used to drink. I used to smoke marijuana. Whatever. It's all going to come up. There is no hiding from insurance companies anymore. It doesn't work that way. It's all going to show up in your history. So contract now, when you are ready to do business. Now we've figured out which company we're going to use. We've got it all done. That's when you're going to get appointed. We're going to tell you to go out here and get appointed. Okay, when you do it one time. The one time you go out and do it, you're going to upload all your stuff. You're going to answer all these questions. It's just like paper forms. You're going to fax in a license, and you're going to fax in your whatever it happens to be pertinent to the situation. CE. You're going to do that one time, though. Every time you're going to add a new company, all you got to do is go in and pick the new company. It's going to take you a couple of minutes the next time. By the fifth time you're doing it, you're adding a fifth carrier, you have 45 seconds, and you go in, you pick the company, and you're just doing this while you're doing something else. And it will beep at you if you miss something. All the questions are already answered. You've already answered them all 4 times previously. It's just going to make you more efficient. It's going to memorize all that information for you. It's going to keep it in the system for you. It's about making you more efficient in your day. You don't want to spend time doing paperwork. I hate paper. Paperwork is bad. So life insurance guys, these are the gentlemen you're going to want to speak to. They have an entire team behind them as well. All of these companies have great products and niches. We understand you have fantastic products already through your relationships with Trans and through Nationwide and Voya and Pac Life and whatever it happens to be. But sometimes these companies may work because those companies don't like your clients for whatever reason. They're not preferreds. Everybody's got a niche. So remember that you can always call. So use those questionnaires. If you got a client with a diabetes, fill out the questionnaire, send it to Trans, send it to Voice, send it to Nationwide, send it to Crump, and see who gets the best offer. Everyone's working on your behalf for you. You don't have to do all the work. Make it easy on you. Long-term care and DI, same thing. You've got this market still. It's a really strong market. It's gotten smaller. The products have changed a little bit on the long-term care side, but you still got some very, very strong products, as well as you've got what we call asset-based long-term care. So asset-based is you're using an existing asset. So here's opportunity to overturn money that you didn't even know existed. Clients telling you they got money sitting in a bank, and I'm not going to touch that because I want to use that to pay for my care if I ever need care. You know what the statistics are in needing care? A married couple age 65, one of them has an 86% chance of needing care. 86% chance. Single person, it's a 75% chance. What does that mean? It means care at home, nursing home, hospice, whatever it is. Are you going to use your own assets or are you going to use somebody else's? These products allow you to just leverage those dollars. Take the money sitting in the bank and get 4 times the amount in coverage. That's right. With very limited underwriting. You can find out about assets you never knew because the client said, no, that money's sitting there and I don't want to ever spend it. I want to use it for long-term care. Well, here's a way to leverage those dollars. And maybe instead of them having $400,000 sitting in the bank, take $100,000 of it, provide $400,000 worth of care, which means they got $300,000 liquid now that they didn't need or that they were using for something else, and now they can put into investments or an annuity or life insurance or whatever. So you're finding more opportunities for yourself. DI, the number one most likely occurrence in your life is becoming disabled while you're working. During your working years, you have a 1 in 4 chance of becoming disabled. Your chances of dying are like less than 1%. Being disabled is a 25% chance. How do we pay our mortgage? How do we pay our bills? How do we pay our car payment, our school, our kids' tuition, whatever it is, our cell phone bill, which seems like tuition nowadays. I mean, how do you pay those bills? If you're getting better, you know, your medical insurance is going to pay for your rehabilitation, but it's not paying your mortgage for you. This stuff is really cheap, and we can do it for white collar, gray collar, blue collar, as well as Lloyd's of London, which will cover just about anybody. So lots of opportunity. Your business owners, if you have business owner clients, and I know you do, ask them, hey, do you have long-term disability insurance? You know, I've been thinking about that. I've been hearing about that. I bet you they're going to tell you they don't have it. And if they say they do, ask them how old the policy is and have you reviewed it lately. Maybe we should get more coverage for you. Your business is booming. You're killing it. You're making a great living. How much of that is protected? So opportunities there. The annuities team, you know, when we look at our annuity team, we have 7 externals, myself included. We're out seeing your offices. We're out visiting you and your colleagues. We only work with WFG. So I'm a road warrior. That's what I do. I see your colleagues every day. It seems like every day. It seems like that. We have 7 internals as well, and we have an entire sales team that's dedicated to talking to you about the right products. You have access to the best products in the industry. The best products in the industry. This is the #1 sold company in the industry. They have 2 of the top 4 products. This is #2 in the industry. This is #3 in the industry. In the industry, not just in WFG, in the entire industry. These are the companies that are selling the majority of the products because they have really good products. Everybody up here's got a good product. All of them fit a little bit different. When you're talking to your clients about rolling over their 401k, they just left their previous employer. They're getting ready to retire, maybe they're changing jobs, whatever it is. They want to know that there's a name behind what you're talking about. That Allianz or Nationwide or Transamerica are going to have their back. These are the best products in the industry. These aren't some no-name companies that nobody's ever heard of. They're all very stable companies with great ratings and great products. So understand we're always going to show you what's the best product based on the client's situation. You know, Allianz has got the #1 selling product, but that product doesn't fit every client. You know, if you got a client who needs early income, it's the #1 product in the industry right now for early income. You know, when that product came out, I'll be honest, when the product came out, it was not really overly exciting. It was kind of a yawns product. We were all saying, wow, they introduced a product to be #5? Who does that? Who goes through the cost of building a product to come out and be mediocre? They're #1 for early income right now in the entire industry. #1.
Can you define early income?
Yeah, so if you want to buy this today, I want to retire today. Not 5 years from now. I'm retiring. I'm quitting my job. I'm going to live the good life, but I need a paycheck every day. How do I get a paycheck every day? I'm not going to work. You know, maybe I'm getting a pension, but most of us aren't. Social Security, okay. It's a small chunk, a little bit. I've got to use my own assets, so I could turn on an income using one of these products that's going to pay me the rest of my life. Every single month, every single year, I'm going to get a check, no matter how long that money lasts. If I live 50, 60 years in retirement, they're going to keep sending me a check every single year. Stability in retirement. That's what people want, is stability. You got fantastic products. Again, we're going to try and fit the product based upon the client's needs. Sometimes you're going to see the same product. Sometimes we're going to show you a product you've never heard of before. And you're going to go, why? And then we're going to show you the numbers, and you're going to go, oh, that makes total sense. It's giving the client $5,000 more a year. That's a big deal. Okay?
Yep.
So I do want to just touch on the DOL, because DOL has caused so much confusion. So what's going on with DOL? Nobody has any idea. And I'm honest, that the industry doesn't know, the carriers don't know, the lobbyists don't know, the government doesn't know, and if they knew, they wouldn't tell us anyway. Okay? So the Department of Labor fiduciary rule, which controlled how we could talk about qualified money, had a delay that took place in December of 2017. So that delay pushed the implementation of the rule back to July of 2019. Now, a court in Texas has vacated and says that the rule is unconstitutional. So it should be stricken off the books. That's being appealed, of course, because there are some people in the industry who want the rule. So it's in a mode of flux until July of 2019. In the meantime, it means that everybody can write business. Everybody with a life license can write qualified business. You can talk about qualified accounts. You can talk about IRAs. You can talk about 401k rollovers. Please do, because if you're not talking to your clients about them, someone else is. This is going to be the year of opportunity for this market, because we know nothing's going to happen in 2018. nothing negatively is going to change in our market in 2018, meaning no additional regulation is going to happen. It's opportunity. You can wait next year, see what happens, but next year you might have to have a securities license. You might have to have a 65. You might have to be a money manager. We don't know, but we know this year you don't have to. So it just means more opportunity for you. So if you want to write business in the qualified market, if you're a life-only licensed rep, if you're non-securities licensed, you just have a